Okay, now let's learn the hammer. Okay, yes, as the name tells you, it indeed looks like a hammer, just like this. Alright, well, this is duplicate. Okay, let's see the original version. This is how it looks like on a chart. Okay, now let's see what are the criteria for a hammer candle in first place. Market has to be in a downtrend. When I say downtrend, please don't assume that a big major downtrend, not at all. It can be even intermediate downtrend as well. Alright? And the bodies of the candle needs to be very small. The body can be either black or white, no issues in that. And with lower wick, it has to be twice the size of body. So far so good. Let's move to the implication part. It implies as a chance to buy at bottom. Now it's marked in red, the font. Kindly note that part. It's only mere a chance. Moving to support and resistance. Yes, you might start to love this candle hereafter by listening this. Hammer can be used as support for future purpose. Okay. Now this candle is used as a reversal candle because of change of trend. And those who might have questions regarding the length of candle, what if the wick is 3 times or 4 times the body length? I would say yes, all are hammer formations candle, but here is the thing, we take trade at high point of candle. Where do you want to place your stop loss? Of course it's below the candle with a little buffer, right? Don't you think your risk is also bigger when candle wick is also getting bigger? So avoid such scenario, okay? And you are going to learn further in how to take trades now. Okay, and looking into the chart of Nifty, let's find some hammer candles. Okay, we don't see any hammer candles over here. We don't see any hammer candles over here. Oh yeah, what do you think of this? Don't you think it's a small body, very small. It's more like a doji, but still it's a hammer, right? This is the body, but it is like 3 or 5 times bigger than the candle, right? But here's the thing, this is not a hammer. Why? Trend is in up way. When trend is up, you cannot take a candle like this as a hammer. You want trend to be downwards, right? Because it's a chance to buy. Market has to be on a downtrend to find the hammer. So this is not valid. Let's move back. No. Anything? No. No. Oh yeah. Look. Now this particular candle. Look at the body, which is this much. Is it twice? Don't you think the body is, the wick is twice the body length, right? Whatever. And the trend is coming down. Now people just listen, okay? Every hammer is not a viable candle. When you trade with a candle perception, okay, look for first thing trend, then look for support and resistance, third look for candle formation. Here the trend is very much down. Okay, and you have a candle. Do you see a support to buy over here? Let us load further back. Okay, we have some prices here, but we don't know actually whether support is there or not. To know support, let me draw a horizontal line at the bottom wick. This line is too thin. Let me just, yeah, this line. Okay, I'm just adjusting to bottom wick and drawing at the high point. So this is the hammer's place. Let's go back in history at the same spot. Okay, what do you see? Do we have a swing high? This can act as a resistance, right? Let me adjust how it should come. I'm considering the lower body and the higher wick. Now this resistance is a change in polarity. This is testing for the first time ever. Okay, it broke out but it never got tested. This is the first time it is getting tested by hammer. It exactly touched the zone and it went up. Don't you think that is good? Isn't it good enough? So, and this hammer can be also considered as future support, right? And I'm drawing like this. Hammer is a support, hence the first candle went inside the support zone, went up, and the candles all came down. See, now there is this aspect called piercing. Okay, now this zone, even though it broke the support, it's just a touch or a, what do I say, a squeeze or a crack. It went down, but at end of session it climbed up, ended here. The close is inside the support zone. Had if the close been over here like this, if the close was here, that means this support zone has been broken, right? But here it pierced, it went back. This support is still valid. Now what you see, this is one support. We have big major support that is coming some years back. So two supports, one and this is another. So two supports coinciding each other together. Now the price from here, it can climb up anything, right? Two supports coming together, and price did exactly the same. It went above like anything. Now that is what we should be looking in a hammer. Don't just bluntly take a trade if there is a hammer formation. Look back, check if there is a support coinciding with that level, and look up on the trend. Here the trend was downtrend. I wouldn't even if these two came into agreement, I would not have bought this due to the fact the overall market was in downtrend. A downtrend cannot be stopped with just one hammer. That came with experience for me. Okay, I used to take up calls as buy when I began studying candlesticks, but later I realized that is not the exact scenario. It takes some time. See, it's just a similar case like a train. When on a station, it starts to move slowly, 20 km/h, 30 speed, 40 speed, 50 speed, 80 speed, 100, 140 speed. From 140 speed, it cannot be stopped unless it crashes, right? So if it wants to stop, it needs to break out. It should it should slowly reduce the speed from 140 to 120, 120 to 100, 80, 60, 40, 20, 0. Similar is the case for downtrend as well. Downtrend cannot be stopped in one go. It will take a little time. That was the time over here. The next time when it made a zero level, see, this part you will be learning on the in-depth analysis, which is upcoming chapters after the candlestick pattern. Okay, now that is the part you will learn the complete stuff, the in-depth stuff that I don't think you would have ever come across it. Okay, wait for it. But before that, you get to learn about candlestick patterns. So back to our hammer. This hammer is a support hereafter, which has two supports, and price came over here. This is also kind of hammer, but not exactly a hammer. This hammer is supported by another hammer supported by a major support. So this hammer has higher probability than this hammer. Okay, too many hammers I'm saying, right? Don't get confused. Okay, just understand this much. Don't take a buy call just because a hammer is shown. On a downtrend, even hammer can be broken down. Now there is this scenario. Okay, price went up, and there is this scenario where hammer, if there is a hammer formation, price broke and gave a close below this hammer's low. Trust me, that would be a big down move. Let me explain how and why. For that I need some. Yeah, sure, we got a candle. The best example, this one. This is a hammer, right? Now those who are trading just solely based on hammer, this is a support too, right? In which you can extend it till over here, and you had a hammer formation just like this, correct? You don't know. Let me just put up this thing, then you will understand. This is a hammer. Anybody just trading candlestick would simply try to buy, and here it is on a support. Once again I'm saying, don't try to do this. This is completely wrong when it comes to trading. You cannot do this on the first attempt itself. You need multiple stacks of opportunity stacking in your favor. This support has been tested first, second, third, fourth and fifth, and a hammer formation over here. Now consider, okay, I'm just saying consider, let's say we go for a long. Where do we go long? Just above, around this high zone we go for a long, and our stop is over here, and our obvious target would be somewhere on the swing high. Consider it, okay, just consider. What happens next day? It gets triggered over here, and candle is nearly closing below the support zone. What happens next? Candle almost goes near our stop loss, taking off our stop loss. Now what happens over here is, okay, sorry for the delay. Now what happened over here? When you took up the trade, you had your stop loss just below the low of at this particular zone somewhere. Some would have placed here, some here, some here, some here, anywhere, but anyhow below the low, right? That is sure. Okay, now all these are sell orders, right? What do you say? The stack of order, it's not just you. Any candlestick traders who took up a buy call would have placed their stop loss orders over here at this particular zone. Now all of these are sell orders. For some reason, sell orders, these are sell orders right below this candle, because stop loss orders for a buy trade would be sell orders. Now as soon as price couldn't support, if there is a huge sell order waiting below this candle, there can be big down move, right? Hence this move happened. I'm sorry, my internet is acting a bit weird, I don't know why. So once this hammer's low is broken, there will be huge stack of sell orders which creates supply, and that supply itself drives the price down further, and that happened over here. It took support and it broke down. It eliminated the final wreckage of people over here. Now if you let me take out, I don't want to give you confusion. On a smaller time frame, this is daily chart, right? So on a smaller time frame, if you draw this, the support will be on a smaller time frame too, right? It broke down, it went up, it's a change in polarity. The remaining, those who are in loss, they would also get out. The change in polarity scenario, remember, this is what happens. You are trading emotions of other people. Somebody's loss is somebody's profit, and if you want to become profit, you have to stack yourself favorable by considering somebody's loss. You are eating somebody's money on stock market. Okay, so these stack of sell orders, okay, this will be finally absorbed at this level, and that moves down. This is what is happening in most of the scenario. Okay, when stop losses are taken out, there will be huge movement happening. All right, so think, so far you might, if you are an intermediate trader who is trading right now, just think, when a low is broken, why price is moving so fast down? It's just a stack of stop loss orders getting executed, which creates either, if it is downside, it is a sell order, if it is on the upside, it is a buy order of stop loss, right? Now here these are sell orders which got stacked. There were huge number of orders over here. Every candlestick pattern, guys, the orders are getting eliminated. They are in a loss with this candle. If they don't place a stop loss, if they are open, definitely when price reaches back to their at least to this level, they will exit, they will try to exit, and that happened on the next day. Okay, keep this in mind. You are trading people's emotions hereafter. What happened next? That's it, pretty much that's it. This was a huge stack of orders that got took out, and new set of buyers came in. Price deviated. Oh yeah, awesome. This is awesome. This is how emotions of people getting trashed. Now at this point, definitely people would have bought it. I don't doubt it, but definitely there will be many hammer buyers considering this support. I don't buy on simple hammer. I wait for price to come and touch the zone again. That is how it should happen. And it came down. You could have entered the trade here. Okay, this is also acceptable, and your loss, stop loss would be like, what is this? Is this 12 stop? Yeah, no. You place your orders here, and your stop loss would be below the major support. And what do you think? You can place your target to be obviously around this zone, right? This is a potential target. If you check how much is this, it's almost risk reward ratio of 2. It is acceptable. Okay, now if you have multiple lots, this is target 2 and target 3. This target has been fixed, but as the price approaches these zones, look for the candle formation. If you see a doji, spinning top, those are the type of candles that you should look for. And there are other type of candles which you will be coming across as well. Let's see what happened. Went up, it came down again, tested support. You are in negative territory, a doji, a big highway candle. Still you are below. Okay, so you didn't get affected with that. And a mega bull candle, which means bulls came over. Blam, boom, doji, and move your stop loss as somewhere over here below this white candle. What happened? Okay, it continued. It made a new swing low at this point, so I guess you can move it over here as well. That would be a stop loss order now. What happened here? Still a spinning top, another spinning top, which is on target 2 over here. So I guess you can move little bit, tightening your stop loss so that you don't want to lose much big, and you got taken out. And that's when you exited the trade. To your bad luck, you just got took out and the market started moving up. Don't worry, you will have another opportunity, because this is your resistance. It got broken out. Now this is a support. Let the price come to you. It came. You can take a buy call over here. See, it worked out. Again, I guess, yeah, this time you got taken out. For the first trade you got win. Now if you had taken up this buy, let's see how much is the risk. This high would be around your take target zone. Let's see how much. Okay, I guess, see, oh my god, this risk reward 2.2, 1 is to 2.2 is your risk reward. 50 point stop loss, target is 150. It's awesome trade. Now here you could adjust your you could take a higher lot size as well here. I'm just speaking of futures for Nifty, because you don't have a equity cash in Nifty. And here, since the risk big, the bigger the risk, you reduce the quantity, and smaller the risk, I mean, the point wise it is small, but still your losable amount has to be fixed, right? So based on that, you should do that. You had this doji, you could have bought by end of evening itself, and I think pretty much that's it. That's, you learned something further than hammer itself in this portion. See, it's always about support and resistance. That is a major key. Fundamentally, traders don't look into this part. I don't know why, because even I learned the hard way. Support and resistance is the most important aspect in traders' life. Try to mark it. Always try to mark your support and resistance. Especially the horizontal. Voila. the one that we drew, these one. Even trend lines are other stuff, but I don't rely that much on trend line. It is okay though, but not that much. If you just draw support and resistance horizontally and look for the higher highs and higher lows, count them, see lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high. What happened next? It moved up. Because why? This is a support for here. Tested, made a new high. It's a higher high. And exactly on the resistance. This is where you book the profit. It's coming down. If price comes around this zone for this part, if it comes, it's good. Let's see. I touched. You could have taken the trade. What happens over here? Okay, you just took out because stop loss just hit. Obviously, there's nothing you can do. Trading is all about stacking favor. It didn't do anything good. Let's wait for other opportunity. And you could take the trade again over here, and your exit scenario should be this high. Let's see what happened. Yeah, you got a profit again. This is testing third or fourth time on the same support zone. No, sorry, you can't redraw the support over here. This is a hammer. Oh yeah, right, it's a hammer, definitely. What happened? You take a buy call. Oh my god, awesome, right? Simple, it's so simple. You had a breakout from the resistance. What do you do? Just draw the next resistance part. Where is it? Over here. Draw the resistance part. So price has to travel until this or this zone. Now wait for, don't try to buy a breakout. Don't try to do that. Let's wait price to come down. Don't chase the price. Okay, it hit the target, but don't enter the trade. Now its price is coming back to your zone. Let's see whether it is giving you an opportunity. Oh yeah, here. This is where you enter the trade. You got an opportunity over here. Now wait a sec. You should take the first. Yeah, this is where you should take the trade. See, you got opportunity. Where is the swing high? You can draw this as well, in my opinion. Let's see what price is doing. But so you can take up a call over here. Your stop loss is this. You can have a target over here. Wow, the risk reward ratio is 4. And boom, shakalaka, baby, that's awesome money. 320 points. Dudettes and dudes, look how awesome this is. Oh my god, I don't see. Wait a sec, I made money in between somewhere over this, not this one. I didn't get this one, but this is past scenario. This one I took. It was a long time back anyhow. Okay, my internet is acting weird now. Oh yeah, got it. I took a loss as well over here, and that is this one. This, yeah, here, somewhere over here. This was my loss where I got eaten out. Okay, moving on. Let's see what happens next. The resistance is getting broken down by the price. What happens? Oh my god, it makes a new high. Mark the next resistance. That's your job now. Where is the swing high? Should I consider this or that? Yeah, I can take this. I just hit your resistance zone. Let's see. The price is able to. Oh, okay. It just broke, and it is testing. I think it is a change in polarity. Yes, it is a change in polarity. Now what? Move to the next resistance, plot it. This is your resistance. The price is exactly on the resistance. You could do the change in polarity over here itself and use a spinning top, right? So over there itself you could have done it. It is coming down. Okay, it broke out. You have a close above and move to next resistance. Where is it? This one. Now I'm just doing it roughly, okay? You'll have to zoom in and then do it. Let's see what happened. Change in polarity. Okay, that's a loss. You took a loss, okay? Just accept the loss. There is nothing you can do about it. Accept the loss. And there you have the change in polarity. This is a fresh set of trade. You take it. Your target is, yeah, exactly somewhere over here. How much is the risk reward ratio? 3. Awesome. Let's see what happened. You took a loss. Take it. Your loss is so small because on this trade you made 4. You earned 4 rupees. You lost only 1 rupee, and here only you losing 1 rupee. Since still you are 3 points profitable over here. Take it. Don't worry. Just take it. Whatever happens. At the end, if you follow the risk management and the mechanism, you will be a winner. Boom. That's another thing. Whether it took support over here? It took support at this zone 1, 2, 3. Okay. It took support 3 times over here. Good. See, I just missed this support part now. Why did I miss it? I don't know. This happens a lot in traders' life, okay? Okay, it broke into a new high. What's the thing next? Okay, we have this one. I need to make a horizontal line on top. I'm making the high of this one. Let's see what price did. Oh my god, what happened over here? Even this support didn't get accepted. Oh, okay. That's a high wavy candle. Spinning tops, 2G. Bearish. Now, note it. This is the high. You have a lower high. You have low, higher low, and this should be the deciding point. Let's see what happens over here. The trend is changing now. See, trend has changed or what? Yes, the trend has changed. It came down. How did I spot? I don't remember this part, but I just spotted the trend change with respect to this, and this. The moment it broke this low, I understood, okay, there is a change in trend, because it made a new low with respect to this, and I expected a lower high with respect to this. See, I didn't even know. I just assumed with respect to higher highs and see the highs and lows part. That is how you spot a trend. We just got deviated just with hammer and we went all these waves. My goodness. I don't know. I love spending time with charts. Let me remove everything. So, in short, you just learned too many stuff, I guess. If you didn't understand any part, just go through it again once more. You will definitely love it, okay? See you on the next candle chapter, right?